Hello, everyone. We would like to thank you for joining us for the 13th edition of the Annual Investment Meeting webinar series. My name is Prashant Udrani, conference producer for AIM, and I'll be your MC for today. The Annual Investment Meeting is the largest investment platform in the world, an initiative of the UAE Ministry of Economy. AIM has been promoting a healthier global economy by linking investment opportunities to fast-growing economies under 6 key pillars: foreign direct investment, foreign portfolio investment, small and medium enterprise, startups, and future cities, with a special event, One Belt, One Road. We would like to thank our multilateral partner, Islamic Cooperation for the Development of the Private Sector, for sponsoring today's webinar. Just a few housekeeping notes before we get started. If you experience any issue with your audio or video during the webinar, just refresh your browser and that should take care of everything. We would suggest using Chrome, Firefox, or Opera. If you have any questions during the webinar, please type them into the question box in the control panel on the right-hand side of your screen. If you like a specific question, vote for it under the question tab so we can address it to our speakers. During the webinar, we will be running live polls located beside the question tab. We would request you to participate by casting your votes. In the webinar today, we will have two prominent leaders, Ms. Brigitte Baumann, who is the founder of Inifo and Go Beyond, and Mr. Iliula Aboiji, who is the co-founder and general partner of Future Africa. Moderating today's webinar is Professor Emilio Caston, who is the professor of Islamic Finance of IE Business School. Professor Emilio, I would kindly request you to please join me on stage and introduce the first leader for the virtual fireside chat.
Good afternoon, everybody. Today we are going to have our first entrepreneur, very interesting with an impressive curriculum. Ms. Brigitte Baumann has 30+ years of experience in bringing new technologies to the market in the United States and Europe. She spent 5 years in McKinsey & Company as a senior engagement manager. She has been an angel investor, including in fintech since 2003, and was awarded the European Angel Investor back in 2015. She's a fintech entrepreneur, founded Go Beyond Investing, one of the largest international angel investing community, specializing in learning and investing programs for novice and experienced angel investors. She's trainer and coach to angel investors, entrepreneurs seeking financing, and startup board members. And she's also an expert in the development of early stage financing ecosystem and work with development agencies such as the World Bank on this topic in countries. Current projects are in Georgia, Lebanon, and Middle East, in Egypt as well. Early in her career, she was an entrepreneur, including with American Express. When initiative became Expedia, Harvard Business School wrote a case about it. And she's a longtime member of YPO organization and currently chair of its deal network. And she was recently joined the World Economic Forum Digital Leaders in Europe Working Group. She holds a Bachelor of Science in Chemical Engineering and from Tufts University, Boston, and MBA in Finance from Wharton School at the University of Pennsylvania. Please, Brigitte, come to the stage, and thank you so much for being with us.
Great. I'm delighted to be here. Can you confirm that you can hear me fine?
Okay. I hear you very well. Do you hear me well as well?
It's a little choppy, but it's okay.
A little choppy? Okay. I'll try to speak louder instead, all right? Well, I have the first question to you, Brigitte, and I would like to ask you, how is Fintech Startups revolutionizing the banking industry?
As a fintech entrepreneur and investor, I always, when we ask that kind of question, step back and kind of say, you know, what's the underlying purpose? What was the underlying drivers of fintech revolution? And it was really a combination of a couple of things, which leads to current trends. First of all, there was very much exponential change in technology, including big data, and existing players having a challenge on adapting quickly to that technology. There was also very new types of needs from especially the new generation, whether it comes from mobile, shared economy. And third, there's a huge trend in change on how people perceive finance, how they want to spend their money, how they want to track their money, and the transparency that they want from service providers. And usually when you talk about dramatic and rapid changes, it's much harder for incumbents to generate the technology, and that's where oftentimes there's brand new players that come in. So that's a little bit at the high level of the kinds of things that fintech is answering. And right now, all the technologies, all the startups that are in fintech are towards those goals.
Okay, thank you so much. I have another question. What kind of challenges do fintech startups face, and what causes them to fail?
Yeah. Statistics worldwide say that out of 10 startups, there's usually about 4 or 5 where the startups after 5 years die and whoever's invested in them loses all their money. There's 3 or 4 who do okay, who get to a certain size, might even get to break even, but just don't have the type of growth where they might either be able to go for a public offering, an IPO, or that they will get bought. So in a way, they start being SMEs, but they don't really return much money to the people who invested. And then there's maybe 1 or 2 out of 10 who do really well. When we analyze, and I would say in fintech, my experience, because I've been actively in this space for the last, I would say 7 years, actually, from an investor point of view, I've seen higher levels of failure in fintech than in other categories of startups. The common ones that are in all startups is that you really have to get the timing right when you're an entrepreneur. A lot of times when you're an entrepreneur, you see opportunity, you see need before the market is ready. So I think for a number of startups, especially fintech, it was just a bit too early. The second thing is often team. The team is everything because the business is going to evolve over the first 4 or 5 years, but the kind of DNA that the team installs when it creates the founding team, some teams can get it right and some not get it right. And then specifically in fintech, what I've seen bigger reason is regulatory. I think we'll talk about that in a few minutes. Usually when you're really innovative, you need a certain freedom to operate, to test. That is very hard in a regulated environment. And secondly, many of the fintech companies are actually enabling technologies that can be very useful to established players. And established players, many of them did not have for a long time, like banks, the mindset of daring to do things differently. Also, especially since they're under even tougher regulatory. So it's been much harder for fintechs to work with the established players when they were enabling technology. So some of them just ran out of money and were not able to continue.
Okay. I would like to open a poll to the audience as well. They can participate with us in this video conference. And once they send their responses, we can, Brigitte, we can go back and take it from there. So to be successful into the investment ecosystem, so which is the most important? The most important is to anticipate the trends in the industry, or to have the most talented on board, including partners and mentors, to have an excellent team, as you mentioned. I would like to open this poll to the audience, and we will continue from there when they finish, but we can continue with our questions. The other questions is, what fintech trend emerged this year that wasn't on your radar in previous years?
Well, talking to my fellow fintech entrepreneurs, the one thing that really changed, not so much for the startups, but opportunities for startups to work with established players, was the whole home working triggered by COVID-19. Financial services had to continue, and all of a sudden, many of the employees could not be at work. So everything around security, electronic making sure distance, anti-money laundering, know your customer types of analysis, being able to digitalize and make sure that there were correct contracts, being able to have enough bandwidth so that banks could have their employees work from home. That's created a huge opportunity, and actually opportunity for fintech, who again offer enabling technologies to banking players, but also for fintechs, some of them who were so well prepared for that. For example, especially in the mobile content and contactless payments, they've had huge uptake in their business. So that's the piece that we always knew was going to happen, but has accelerated this year.
Okay, thank you so much. Everybody knows that the financial industry has been quite regulated by central banks. But what can regulators and supervisors do to facilitate the adoption of fintech?
Yeah, I sit a bit on both sides, both as an entrepreneur, but also in helping some governments think about policy making in this space. It's really hard. I think the biggest challenge we face as fintech entrepreneurs is that we need, and our DNA is to move fast and to dare to do new things. The regulators' point of view is, in a way, first of all, they're structured to go slower and to think of all the things that could go wrong. I have seen some countries do really well when they establish sandbox concepts, where they let entrepreneurs, in a way, play in a bit broader than the traditional, but still in a regulated. That's great. What I find so that I would say every government, every country, that really helps. Sometimes the good news is, since there's competition now between countries for entrepreneurs, some countries have become better at this, not because they really wanted to, it's because they don't want to lose the entrepreneurs to go to other countries. So that's helped. The second thing, though, that is still not working well is that when policymakers want to think about new policies, there needs to be a better way to really get the fintech startups to be more a part of that conversation. Because there's definitely some things that feels a bit, it's still protecting kind of the old guard and really not adapting fast enough to the innovation. And especially that as fintechs, by definition, we need things that are transparent, low cost, and still provide protection to consumers and provide security. So I think involving a lot more the startups when there's new policy changes, and creating more environments where there can be exploration in a controlled way is still really needed.
Okay, thank you so much. We are going back to our first poll.
Yeah.
To be successful into the investment ecosystem, into the startup ecosystem, and in particular in fintech, as you mentioned, to have an excellent team is the winner answer.
Ah, okay.
And half percent of our audience is voting. So followed by the most important is to anticipate the trends. So let's say that to have an excellent team in place and to anticipate the trends in the industry. Okay, so we are going to open the second poll. And the second poll is, to launch a startup is hard because you don't know who is who in the business angel space. You don't have access to incubator accelerators, bad experience with previous business launch, and you don't like to have partners. Let's open this to the audience, and we are continue with our next question, which is, what is the financing environment for fintech startups?
Well, it'll be interesting to see what the poll says. First, I'd like to just step back on the answer that you just gave to the poll, because I find that the two answers are super correlated, because as an entrepreneur, not only is it great to have a diverse Because if you have a diverse team, even though you might be ready to kill each other at any point, that means you're continuously seeing things differently, and it enables you to see and interpret and then take actions based on trends much better. So a lot of times when we, as an investor, when I look at teams, even though I love it when they all know each other, they've gone to university together, they say, oh, we're all buddies. I wonder if that's going to enable them to really see the trends and to navigate in the kind of fog that you navigate when you're an entrepreneur. So that's just a little side of I see very strong correlation between team and ability and the diversity of the team to ability to navigate and see the trends. So if we go back to financing, financing actually in fintech, there was a huge uptake. I would say about 5 or 6, around 5 years ago, 2015, 2016 were really hot. And I remember in a number of countries, as long as you were saying, I'm a fintech entrepreneur, even if you just had a business plan, you could get a lot of cash really fast. Now that's changed, and it's changed for 2 reasons. One is the good news is now we see more corporations investing in startups, but we've also seen a lot of valuations that were very, very high, and early stage investors like business angels got burnt, and also they realized that it was going to take much longer for some of the technologies to have take up because of regulations, because of more conservatism in the existing industry, and the exits were going to be quite long. So right now, before COVID-19, it was not as easy as for a fintech entrepreneur to find money than it was 4 or 5 years ago. The good news with COVID-19 is that on one hand, some people have just stopped investing. On the other hand, because fintech is viewed as a critical need, that needs, especially with social distancing, virtual, contactless, and all that is a critical thing. So there's a new interest in investing in startups. So I'm right now it's quite slow, but I'm optimistic that it will rebound.
So this crisis is helping to accelerate the digitalization of the industry, definitely.
And the workforce, which was absolutely critical to also digitize for consumers. Yeah.
I have another question. Do you invest in fintech startups? And yes, or why yes or why not?
Yeah.
Yes.
So I'm one of those investors who also got burnt. Now, I have fintech startups have a special place in my heart because I'm a fintech entrepreneur too. So I wear both hats. When I invest in fintech startups, usually it's ones where I really feel, besides having great technology, they're really driving the change of values of bringing transparency, democratization of payments. That's a big thing. So I'm a purpose-driven investor. I love making money, but it first has to be that I feel it's contributing. Right now, since my portfolio in fintech is not doing great, I'm focusing on making sure my existing investments, especially those who can't do well in the current circumstances, get the financing. And I'll probably restart in maybe 6 months, actively looking at new ones, unless I feel they're perfectly in target with the current needs.
All right. If we go back to the answers and responses, the audience of the poll, to launch a startup is hard because, well, the most voting answer is you don't have access to incubator or accelerators. I think these sort of networks are not very well developed in certain places, followed by the bad experience with previous businesses launched. Could you please give us your thoughts about it? Do you think that to launch a business is hard because entrepreneurs, they don't have full access to the incubators or accelerators?
What was the number for business angels?
Well, it's like 50% of the total responses.
For business angels.
For business angels, yeah. You don't know who is who into the business angel space.
Okay.
Allow me to say that the business angel space sometimes for them is like a black box. They don't know very well who who is doing what?
For accelerators, so the first thing is I see that there's really often multiple stages when you're an entrepreneur, but it's true that when you're just starting, especially as we had talked about before on the regulated space, being able to decide which countries one is going to operate and very quickly getting into that ecosystem through the accelerators, through sandboxes that sometimes governments organize is really critical. One platform that that's very well developed for that is called f6s.com. It's the letter F, the number 6, the letter S, like Sam.com. They have a huge list of accelerators, and you can sort also by type. So I agree that it's really good to join an accelerator, especially in your space when you're a fintech entrepreneur. But there are a few places that are becoming easier and easier to find them. But I would say make sure that you join one in a country that's going to be realistic for your regulatory environment. If you're going to be offering certain things that need to be regulated, because or else you might build a beautiful business model, and then when you go back home to where you're launching, it's totally not relevant.
Okay. We are going to open the last poll of this panel. Barriers to starting a fintech startup. The first would be regulation and red tape. The second one would be you don't have enough savings to start a business. The third one, you have the idea project, but you don't know how to start. And the last one, you have no knowledge about running a business. Okay, so this is a poll, the last poll of this panel. I have a question from the audience. Brigitte, what sectors are more likely to embrace easily digitization on a short term? And what do you recommend to emerging countries or frontier countries, especially in Africa, to do for realizing digitization?
Do you have an idea of when we say digitization, what would be for you an example?
I think they are meaning about digitalization or the industry. Okay, so for example, I'm talking about not fintech, but for example, medtech. For example, all these pharmacies that you can find on the road become digitalized because there is a new trend from the e-commerce. You can access easily from home, from the office, the medicine. You can. I think Africa offers a lot of opportunities, to digitalize many businesses because as a frontier market, there's a lot of things to do, and many countries that they are, in advance. The GDP is quite stable and growing very well. So this definitely will help to the youngsters to launch their own businesses and to improve the existing business that they are, currently, on the road.
Mm-hmm. So maybe to answer that, if I stick a little bit to fintech, right now, what I definitely see is still very much a big need is the digitalization of the workforce in finance. Doing that securely, because I think that what we're just experiencing now is not going to be resolved overnight, and we need to the finance industry still needs to be able to provide services while being able to be much more digital and online rather than in face-to-face. So that's one. The second thing is there is unfortunately going to be such a huge economic hit because of COVID-19 that anything that we can continue to do that can be done through helping those who are going to be hit most to be able to do payments very flexibly. I was just on a jury last week, for example, in the US now, to help a lot of people. They've legalized that people could become home cookers and then sell their meals from home, enabling, for example, payments for that. And those kinds of things are going to be really, really important. Blockchain is going to be absolutely continue to be critical for trust, transparency, and digital assets. So I think those would be, for me, kind of the three things that I would say are most critical. And what I love about continents like Africa, of course, you can't speak about its individual countries, but for many of those countries, and we're talking about emerging countries, I'm doing a lot of work these days in Georgia, for example. What's great there is they don't have to overcome, in a way, a lot of older infrastructure. They can build from scratch. And that's why Africa has done so well with mobile payments. So I see a huge amount of opportunity in certain countries that are emerging countries to leapfrog things, because they're not reinventing from the past. They're inventing with what we have available today, and will very much have the value of transparency, democratization, and low cost, which is really needed.
Okay. I have a last question before to go to the poll and comment, the feedback of the audience. What are the best ways for fintech startups and established players to work with together?
Yeah, I think it's on both sides. I think that I invest a lot in deep tech, and I see that it's relatively easy for startups to work with companies like Cisco, Intel, Google, all that, because the culture of those big players are already very, very entrepreneurial, and they're so used to it. So even though it's not easy, it's relatively easy. I think the big thing in the fintech world, there's very few fintech companies that I know who don't need to have some level of interaction with existing players. And so I think the more there are programs or departments in large corporations that are set up specifically on how to know how to work with startups and to help the startups, the fintech startups, navigate in the labyrinth of kind of traditional players, would be a really, really welcome thing. Some of the corporations, they do that by having accelerators. But I think building more bridges between the corporate world and the entrepreneur world in fintech will be very beneficial for all. Okay.
Let's comment the last poll, barriers to starting a fintech startup. Okay, the audience, the majority of the audience is saying that the regulation and red tape is the toughest one. But they have brilliant ideas and projects, but they don't know how to start with. So this is at the end one of your roles, no, to help people to move forward in their lives with their, with their projects. Maybe you can comment some.
Yeah. Totally agree on the regulatory. As I said, that's where, if there was only one thing that I think would move this sector more, is for regulators to do what they can to make it easier. As a business angel, we're actually not there to help ideas. We're there when there is already the beginning of a business. There are 2 or 3 founders. There is a prototype. There's some pilot clients. So for the idea, I find things like Startup Weekend can be great. Some accelerators, but there are really short ones that are not for a full 3 months, because who knows if your idea will work or not. So I think there are some programs. Going too early to any kind of investor is not necessarily good, because if you get no first time, it might stick for a long time. So really knowing what type of financing works best when, and getting in touch with those early enough so that you become on their radar screen. They get to know you, they get excited about what you're doing, they see your progress. But going too early to any type of financing is not a good idea. But there's wonderful programs throughout the world. Startup Grind has chapters around the world. As I mentioned, Startup Weekends. There's a bunch of those that are more informal, but are perfect for funneling your idea and finding potential co-founders.
Okay. Well, we have a lot of questions about Africa. Our next panelist is an expert as well in that continent. Well, but under your opinion, which are those countries in Africa you mentioned before most interesting to, or most, let's say, advanced to do business into the fintech ecosystem?
Unfortunately, I know when to stop when I'm really not an expert in something. So I actually look forward to hearing the answer to the next person. Yes. I think he will be. I don't have enough experience. Africa is such a huge continent.
Most of the questions are with Africa, and I think our next panelists will help us a lot.
Exactly.
Find the answers. Thank you so much, Brigitte.
You're welcome.
Contribution to this panel, and let's move to the next one.
Hello. How are you doing today?
Hello. We have today, hello, Mr. Abuyeji. We have a very, successful entrepreneur. Mr. Yenoluba Abuyeji is the general partner and co-founder of Future Africa. Future Africa is a platform that provides capital, coaching, and community for mission-driven innovators building in Africa future where purpose and prosperity is within everyone's reach. Prior to found Future Africa, Mr. Abuyeji served as a Deputy General of the Madame Obi Ezekiel-Wesley with the presidential campaign back in 2019. He also helped to build Andela and Flutterwave, the two Africa's largest and fastest growing technology companies backed by global investors. With 19 years old, I started bookneto.com in a partnership with a friend. The company, or the startup, is a social learning platform for sharing and organizing resources within learning communities. Back in 2013, he started Flora along with another partners. The company is a digital learning platform for African universities. In 2014, founded Andela with other partner, and he's listed among the Forbes Africa's 30 under 30. Thank you so much for having with us today. And I would like to start with the first question to you, Mr. Abuyeji. Can you outline some big trends in fintech in your continent in Africa, and in particular in your country, in Nigeria?
Fantastic. There's been quite an evolution, particularly as it pertains to the fintech industry in Nigeria. We started with payments, expanded access to payments, and the question was, how do I deliver value for services that I receive, right? And then over time, that changed because people started to say, okay, now I can get paid electronically. What's next? What's next? And then people started asking the question, what can I do with the payment capabilities that I now have? And that has opened up a whole world of possibilities in the fintech space. Do you understand what I'm saying? So for example, we at Future Africa, we had a very early thesis on the wealth management space, that people want to be able to make their money work for them. They want their money. They don't just want to move their money. They want their money to work for them, right? And we started to invest in companies that helped young professionals in Africa invest in global markets, because the African market has the same challenges that prevent global investors from coming in. So there's quite a bit of interesting trends. Another very big trend was seen is in the asset lending space. So that is people not just lending cash out, but now looking at, okay, how can I provide an asset to this human being that enables them to be more productive and then get paid back on the back of the productive assets. That's another big trend that we're seeing in the asset lending space. Another very big trend that we're seeing is obviously in the remittances space, but in very interesting new model of remittances that really focuses on how you engage diaspora to invest in critical assets in Africa, like in property, in businesses, you know, and so on and so forth. Do you understand what I'm saying? So there's quite a lot that's going on in the fintech space beyond payments. And I think that's one of the things that the global community has to open their eyes to, you know, that it's now beyond payments. We've gone beyond payments to other elements of that.
Okay, excellent. Thank you so much. The second question is, what are the greatest challenges facing regulators globally and in particular your region, and how might they respond?
Yeah, so I mean, regulation is definitely still a big, but I would argue that a bigger challenge is skill sets and know-how for operating in this new space. Because you see, as more and more people, especially because of COVID, migrate into this new digital economy, what is happening is what is happening right now is that you see a lot of the sector needs a lot more talent than it has. We invest in a lot of fintech companies, and the biggest need right now, we're looking for CTOs, we're looking for engineering leaders, we're looking for engineering managers. So not just the basic level coding skills, but more higher level, you know, customer experience managers. We're looking for product designers. We're looking for researchers, you know, and these are the needs that my portfolio companies come back to me with. This is the biggest challenge today. Just managerial talent is lacking in the space. And I'm hoping that that's an opportunity that a lot of other startup founders around the world see and decide to come and participate in, because this is unequivocally one of the biggest places in the world, the biggest markets in the world for fintech. Then I would say regulation is a challenge. But then, you know, the challenge with regulation is ultimately it's a function of size. Can you hear me, please? Hello? Hello? Can you hear me? Hello? Hello, can you hear me?
I can hear you. I think there is
I think we lost Emilio. Oh
yeah,
no.
we lost Emilio.
Yeah.
Why don't we do this before Emilio comes in? I think he was probably going to go out with the poll question. So
I'm back.
Oh, he's here. He's back. Okay.
Yeah.
I'm back.
Fantastic. Okay. Hello. Yeah. Can you hear me? Okay.
Very well, everybody.
So I was talking about regulation as the second issue. So regulation is an issue, but really, I think it's really the development of open access platforms that allow people to innovate without restraint. And there's been a lot of progress in Africa on that, actually much more than people are willing to admit. For example, last year, I led a nonprofit to raise capital from nonprofit capital donations from Omidia and DFID to set up the first African sandbox. And we launched it in December last year. It already has over 2,000 members. It's launched about 50 products. And people are leveraging that as a way to find new talent and new products to plug into their financial services products. So I think it's possible that regulation actually changes over time. But it's important that we're engaged in that conversation with regulators and we're understanding of the fact that they will take some time to fully understand what we're trying to do. So those are some of the biggest challenges, but I would say, you know, I'll stop there for now.
Okay, excellent. We are going to open our first poll to the audience. And the first poll is remove the barriers to business startup and convert interest into action. We are able to get this, increasing access to early stage startup funding. Mm-hmm. Also, on the flip side, identifying those who show entrepreneurial aptitude from a young age. We are going to open this poll to the audience, and after 5 minutes, we will back to the to the poll, we can discuss and comment. But I have another question to you, Mr. Abuyeji.
Yes.
What can you tell us about different jurisdictions in relation to payment systems?
So, you know, I think that sorry, just if you don't mind repeating the question again, I missed a sentence. You said, what can I tell you what in relation to
it's okay. What can you tell us about the different jurisdictions in relation to payment system?
Okay. So one thing to keep in mind about payment systems is that, you see, every payment system is different, and this is not the card model. So in most of Africa, you have one of two models. You have the bank-led model or the mobile model. And, you know, the rest of the world uses Visa, MasterCard, so the card model. You get what I'm saying?
Okay.
But you see, the challenge really in Africa is that, you see, or really the opportunity, as I like to look at it, is that most jurisdictions have centered around one or the other, while I think there's an opportunity to do both. So for example, East Africa has gone the mobile route. So basically mobile money systems are kind of the predominant way people pay, with M-Pesa and with Tigo and so on and so forth. Some of West Africa as well has centered around that model, but there's still a healthy fight from the banks. But countries like Nigeria are very bank-led. So for example, the primary way people pay in Nigeria is bank account numbers. They make transfers to your bank account, and those are instant, if you can believe it. For those of you in the US, where it takes 2 or 3, you know what I mean? You know, it's actually surprising about how advanced the system is. So that's just to tell you that, you know, the different countries have different models. Some are laissez-faire about regulation. Some are very hard on it, like the Francophone African countries. And ultimately, I think, I mean, I'm happy to do a whole spiel about each region or each country, but haven't helped build a company like Flutterwave that has expanded into 16 countries. The best model that works that we found is really working very closely with a banking partner who has experience in the local jurisdiction. Do you understand what I'm saying? And basically leveraging that bank's presence to be able to bring together the entire ecosystem. And the goal has to be an omni-channel, omni-access, if you can call it that, and very fluid fintech ecosystem where one payment method flows into the other, because that's what guarantees usage for everybody. I used to say that the problem really that fintech in Africa was having is that we had too many payment channels. We were confusing the merchants. And so the merchant was defaulting to what they know, which is cash. That was what was limiting the industry for a long time. But as interoperability has become the norm, that has actually reduced. And we're seeing a lot of merchants being more comfortable taking any different kind of payment method, because companies like Flutterwave have really moved the needle in terms of combining all the different payment methods a merchant can possibly accept into one system. Does that make sense?
Yeah. Okay, let's go to, thank you so much. Let's go to the next question. It's true that in some jurisdictions, fintech companies are operating within the gray areas of the legislation and prefer to ask for forgiveness after the fact rather than to ask for permission at the outset. In the worst case scenarios, people don't try to innovate because of the regulatory burden. And how can we solve this and generate a friendly regulation to help entrepreneurs set up more fintech startup in some regions?
Yeah, so I think that sandboxes are a big solution to this problem. And that's what we've tried to educate the regulators about consistently, that look, if you engage with sandboxes, there are benefits to you as well. First of all, you have the ability to see what's being innovated on, as opposed to have people do it behind your back, and then they have to ask for forgiveness. And then also, you know, people who don't come to the sandbox clearly don't want forgiveness, right? They're not, neither do they want permission. So in a sandbox, people can innovate new products and show you before you can regulate them. And that allows the pace of innovation to grow. And that's why we've encouraged, the Nigerian community has its own sandbox. We're working with the Kenyan community with their own sandbox. So these are examples of how these things can come together. I don't know if that makes sense.
Okay, I have another question from the audience. This question is for you. What do you consider region collaboration to cover gap talents? Do you think a regulation policy covering the region could help to boost investments?
My sense is that regulation is a lagging indicator of a region's potential as an investor myself, right? So by the time this space is getting regulated, so, I think regulation helps. It can help stabilize the innovation or grow it. But as a reason to invest, I'm always skeptical because I feel like you should be ahead of regulation. That's how an ecosystem is ready for investment. The important things to focus on are how do you partner effectively with existing institutions in that market to innovate together, especially when it comes to things like where you require banking support or banking partners or presence. And what is the talent doing? Do you have the talent that is looking into the space, both from the bank side and from the startup side, working on the problem? Those are the two most important things for me.
Okay. All right. We have, the responses from the audience regarding the poll. The poll was remove barriers to business and convert into actions. So the majority of the votes, are saying that increasing access to early stage startup funding. So this would be one of the solutions to, to remove the barriers to business startup, as you mentioned. And as we mentioned, so the majority of the audience is agree with it. So the next, I want to launch the next poll to the audience. I will come back later on. Innovation during crisis. Do you think that expand and increase or decline and drop? Please open the poll for the audience and let's move to the next question. About 70%, Mr. Abuyaji, this is a question for you. 70% of the African population is unbanked. Is this a big opportunity to develop fintech initiatives in Africa? And why?
Okay, sorry, you said 70% of what?
60 to 70% of the adult African population is unbanked. They're not
Yes.
So a big opportunity to develop fintech initiatives in Africa?
Yeah, amazing opportunity. I mean, it's the biggest opportunity of our time. However, I think the way it's done really matters. A lot of the fintech products that have come out onto the market haven't been empowering enough, They've left people asking, how exactly does this product lead me to a better life? And oftentimes when the conversation around financial inclusion is had, it's almost had as a moral conversation. You should be financially included. You should have a bank account. You should be using insurance. You should be using credit. But no one really answers the question of how exactly does that benefit my life? And I think that's the question that is limiting people from accessing it, because people still don't understand how having a bank account where it's, money is deducted from you every month, the money you could have kept cash and nobody would deduct from you is deducted from you every month. You have a slower savings rate, meanwhile you could have invested it and made more money. There's so many things that are wrong about the existing financial institution system that when they come up with a conversation about inclusion, it sounds almost like a joke, like as if people are just trying to be hoodwinked and give their money to bankers who people don't trust.
Yeah.
You know what I mean? So
yeah.
The conversation about financial inclusion has to change to putting the customer at the center. How does this benefit the customer? How does it help her restock every day for work? How does it help her grow her business? How does it help a farmer sell better? How does it help a student go to school? How does it help, how does it help me to be able to pay my bills and if I can't pay my bills, get some support to do so. How does it help me manage shocks, like when I have a health crisis or when I have a food crisis? If fintech becomes that kind, if financial inclusion becomes that kind of product, people would adopt it because they have to. And we have a huge opportunity with COVID because the traditional alternatives to fintech are no longer safe or available. But so long as we continue to talk about this from the point of view of rights and proprietary and using a Western lens to look at fintech or financial inclusion, it will never make any sense to the average African. And that's the battle we're fighting here every day.
Okay, excellent. So the other question is about financial inclusion as well, because fintech improves financial inclusion, but the question is, how developed are the telecommunication companies in Africa that could improve financial inclusions to unbanked population, as more people own smartphones than those who have bank accounts? And do you think that telecommunication companies have a better reach than the banks, which in turn creates an industry for mobile money products and payment platforms?
Well, I think objectively, at least I can speak for Nigeria, the mobile telecoms companies obviously have quite a bit of reach, right? Just by virtue of the nature of the product. Everybody who has a mobile phone is a potential vector for the network. Meanwhile, like in Nigeria, just a funny joke. My father is the head of a church, the Foursquare Gospel Church, and he has about 4,500 branches of his church, right? The average, all the banks in Nigeria are about 5,900, right? So, and it's not possible that, you have maybe, and I'm sure my father is probably like the third largest church in the country. There are other churches that have even more branches. So just to give you a sense of how little banking presence there is in any case. So you can't actually leverage the banks as infrastructure for reaching people. But technology can help you extend the presence of the banks, right? Because technology can allow anybody who has a mobile phone to become a banker in their own right. Yeah. So that's the power of the partnership with the mobile telecoms companies. However, I think where there is need for caution is that they cannot do it alone. Telecoms is not the same as banking. A different layer and level of trust is required. And we've seen some massive blowouts of mobile money initiatives in places like India, right? And I would argue even the ones in Africa are still subpar in their service of financial service products. It's just because the banks are so bad that they seem to shine. But if they were really up against some serious competition, I don't think they would win either. But they do have that reach, but that reach is not everything that you need to extend financial services. There's more that needs to be put in place.
Okay, we have the final, well, we have the responses from the audience about the poll we upload, innovation during crisis. The 80% of the answers are saying that expand and increase. So the innovation expands and increases more than 80% actually during crisis, and less than 20% decline. Yep. So what do you think about the innovation during crisis? I'm a particular believer that expand and increase, but I want to hear your thoughts.
Yeah, definitely believe that innovation expands and increases during crisis. Huge believer. But the thing is, it's also very important for you to note what expand and increase means. It means that the innovations that work and the people who are focused on innovation in times of crisis actually get successful innovations that expand and increase, not the other way around. I don't know if I'm making sense. So a lot of people right now are not focused on innovation. A lot of people are not investing in innovation. They're going to invest at the top of the market, but it's not going to stop the fact that the people who today are putting their heads down and building now are the ones who are going to benefit from it. And we've seen this through history. I was telling a bunch of my friends the other day, the last time we had riots like we had in the US over the last week was in 1919, right after the Spanish flu. And what followed after that was the Roaring '20s, which brought not just mass production of automobiles and human flights, but also brought us unions and women's rights. So right now is the perfect time for everyone to innovate and everyone to increase productivity. We're going to have to dig our economies out of the hole that COVID-19 has dumped them in. And the only way to do that is by increasing productivity. And the only way to increase human productivity over the years is through innovation. So that is really going to be the focus for the serious people, the people who are going to become the billionaires of the next century. And, there are those who would never get that, and that's okay. But I'm a firm believer in the fact that innovation increases, and the scale of innovation and the impact, more importantly, of innovation increases in the middle of crisis.
Yeah, I agree with you. Okay, we are going to launch our last poll of this panel. Looking at the emerging and frontier markets, okay, the options are there is no enough capital to be allocated into startups in those regions. Governments and private investors are the main investors and the main supporters. If there were more venture capital funds that would attract more talent, VC fund managers, and new players to invest in those markets. But before to get the answers from the audience, I want to ask you another question, and is how do you crowdfunding activity in your region as a source of funding, in lack of other types of funding for young entrepreneurs?
Absolutely. You see, I haven't always been a fan of crowdfunding, but I've become a very recent convert of crowdfunding because we ran an experiment in my firm in the wake of the COVID-19 crisis. We had the crisis and we had a number of portfolio companies that needed financing, and investors were bailing on them because of inaction that naturally sets into the market as a result of a crisis like COVID. And so we thought about it and said, what do we do about this? How do we solve this problem for our entrepreneurs? And we basically started something called the Future Africa Collective. The Future Africa Collective allows anybody, quite frankly, who applies to become part of the collective to see our deal flow and invest with us through a financial institution partner. So we give you all the reports that we make about startups, and the reports form the basis for you to make an informed decision of whether you want to invest alongside us or not. And then you can invest. And the first deal we put up was filled out in 72 hours.
Okay.
Right?
All right.
And we have now we had over 400 people apply. We selected 80. So that just shows you what the power of crowdfunding is looking like. I think that's going to increase because what we're seeing from our research is there's a lot of young people, especially, who have cash, who have savings, because they've been preparing for the next crisis. But unfortunately, they don't trust the banking system. They don't think the bankers are going to do right by them, right? And so they're looking for ways to get into alternative financing assets. They don't trust the governments. They think the governments are gonna print too much money, and the bonds will be useless. So they're looking for alternative financing assets, and crowdfunding is becoming one of the ways. But what is critical is the presence of a trusted intermediary that can help to coordinate that activity, and that's what we've become with the Future Africa Collective.
Yeah. I think crowdfunding is a new trend into the funding, space for startups and small businesses. Like years ago, it was a microfinance industry. Correct me. Now there are different platforms, not only equity platform as well as donors, as well as lending platforms. There are one of them are just for the, particular sort of entrepreneurs. Yeah. And is playing a very good role into the funding new projects and new small ideas from the entrepreneurial ecosystem. Yeah. So okay, if we go to the poll, the majority of the audience said that there is no enough, looking at the emerging and frontier markets, there is no enough capital to be allocated into startups in those regions. What do you think about, what are your thoughts? Because the other answer would be governments and private investors are the main investors into those markets, emerging and frontier markets. And the last one would be, if there were more venture capital fund of funds that would attract more talent to the region. So, but the majority of the voters selected that there is no enough capital to be allocated into startups in those regions. Do you agree with that?
Yeah. Well, I would say somewhat. I'm very careful about how I answer that question. I would say somewhat, but I think that there's a lot of work to do in terms of preparing them to be ready for investment. That's my opinion, and I think that work is often underestimated by many institutions. People expect to see ready companies from day one, and that's just not how things work. Founders have to be coached. Yeah.
Okay. The last question is from the audience. One of them, the people is asking, what advice would you give to entrepreneurs to be successful during this crisis, during the COVID-19 pandemic outbreak? What advice you to them?
I have a lot of advice. But three things I would say, to keep in mind. Number one, there are numerous problems around us. If there's anything the last week has shown the world, there are numerous problems to solve, from discrimination to, inequalities to different sorts of challenges. The best startups are the startups that look at those problems and tackle them, right? Don't be that startup that's focused on problems that don't matter to anybody. Focus on the problem that's burning right now, and there are many of them right now. It's the best time for you to do that. That's number one. Number two, team is critical. Team is absolutely critical. You need to, everybody needs to take the opportunity of the fact that there are a lot of talented people that are out of work right now, and find the best possible team members you can. Because the truth of the matter is, many of these people are not going to get jobs. There are no jobs for them. But if they build something new, maybe they can get employed and also employ other people. So get together and look for the best talent you can find and build something together. And then I'll say the last thing for founders is really, you need to have a mission mindset, especially at this time. There's a lot of pessimism in the world. There's a lot of reasons to be angry. But as I was telling my friends yesterday, I think the worst thing about the state the world is in right now is that there's so much anger without action. There's so much rage without results. Don't be one of those people. Try to be the kind of person who, by the work that you're doing in your business, can provide leadership to the world and build something new that actually has an impact on people's lives. So that would be my advice.
Okay, we are out of time. Thank you so much, Mr. Abiy, with your high contribution of your high contribution to the panel and to this session. And thank you so much to the organization to give us this opportunity to speak about the entrepreneurial leaders. And let's continue in the next conference coming soon. And
of course,
thank you so much.
Yeah, thank you. Thank you.
Thank you so much for joining us. Thank you so much to all our speakers for joining us today and sharing their thoughts and perspectives about the future of fintech, COVID-19 impact on the fintech industry, and the roadmap to becoming a successful entrepreneur. I would like to once again thank our multilateral partner, Islamic Cooperation for the Development of the Private Sector, for sponsoring today's webinar. I would also like to thank our audience for joining us and for sharing their questions. The link to today's webinar's video will be sent to you via email. We are also conducting a short survey to get your feedback on today's webinar. The link to the survey will be shared to you via chat and via email. To register for our next webinar, which is scheduled for the 4th of June 2020, please visit our website www.aimcongress.com/webinars. Also follow us on our social media channels to keep yourself updated. Thank you all once again. Thank you so much to our speakers for joining us.
Thank you, and stay healthy.
You too.
Thank you. Thank you. Thank you so much.
You too. Yeah. Thank you.